Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 31st of January, 2020. So yep, welcome everyone. Welcome to this Friday's afternoon session. Welcome to this January's last trading day. So yep, as always, guys, before we jump into the charts, quick read through our risk disclaimer. So I'll just mention a few parts here. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. So I'll give you a few seconds to read the rest and we can continue. Okay, also just before we jump in, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we update on a daily basis. So yep, I believe you can find a lot of useful stuff here for yourselves, guys, so feel free to visit us on jfdbank.com and click on the research tab right there. So now then, let's jump into the charts. Now the first one I want to touch on here is the FTSE100. Now I've mentioned the FTSE previously this week, and basically what I was saying, that in a way there is a possibility for this one to continue drifting lower. So that's exactly what we're seeing today, and also this is what we've posted here today on our JFD account, where basically the FTSE we've showed this scenario where it may end up pushing towards this medium-term upside support line taken from the low of the 3rd of October. So for now, everything's kind of leaning more towards that. From the short-term perspective, it is still trading below this downside resistance line taken from the high of the 17th of January, but that's a bit of a tentative one. But nevertheless, we'll keep that on our chart. But the main focus right now is, of course, on this medium-term upside support line taken from the low of the 3rd of October. Again, like I said, guys, for now, given that it broke below the 7,393 territory here, yes, it kind of increased its chances of a further drift lower. So that's why for now we're going to remain cautiously bearish. But again, like I said, the downside might get limited near this upside line, and then we'll take it from there. If it wants to break this, that's fine as well. The only thing is that for us in that scenario, in order to get comfortable with further declines, a drop below the 7,223 level would be required. Until then, we'll be very careful with the downside. In case this decides not to travel towards this upside line, this medium-term upside line, and travels back to the upside, yes, we will aim for some higher levels. But if the index travels back above the 7,393 zone, but then still we will aim only for this downside line here, and then we'll take it from there, see what he wants to do after. Now, the S&P 500. So I talked about this one yesterday, and what I've mentioned here is that if we get a further drop lower below the 3,234 zone, then yes, we could see this one declining further down. But as you can see, the index traveled back above the this medium-term upside line taken from the low of the 3rd of October, and of course, all this kind of creates a potential kind of scenario where we could see maybe some more upside. The only problem here is, of course, the cash index, and the cash index is currently, well, roughly still above the this upside line here. This upside line, as I said, taken from the low of the 3rd of October. Again, for us to get comfortable maybe with slightly higher levels, ideally we would like to see a push above the 3,293 zone here, which is the high of the 29th of January, and only then we will aim for further upside here. But still, even then, we'll be very careful and cautious around here, because in a way, it could also find some sort of resistance somewhere and then reverse back to the downside. Looking at, like I said, looking at the cash index right now, it is currently balancing around the 3,279 zone, so just basically just slightly above this medium-term upside line. But again, like I said, don't get me wrong. It does mean that from here we will travel higher or something, because we're balancing above this medium-term upside line. For us, we would need to see a nice good push above the 3,293 level first before considering a potential move to the upside. And again, the same story remains with the downside. We're waiting for a drop below the 3,234-35 zone here before considering a potential move to the downside. In a way, what you could also do on this chart is basically maybe get rid of this upside line, because again, you can see it got violated. So you can keep it for now, of course, but probably don't focus on it too much. Mainly focus on these key potential barriers, the resistance barrier here near the 3,293 and the support area near the 3,234 mark. Jumping into a few other instruments, which is Brent. Now with Brent, I mentioned Brent this, it wasn't this morning, it was yesterday in my Trader's Tea Time. But what I was saying, that basically given the fact that we managed to, or should I say, given the fact that the downside line managed to hold and managed to keep the price lower, we saw yesterday the slide here towards the 58.50 zone. You can what I was saying, that if we get a drop below this, then in a way it increases the chances of a further drift lower. One of our targets was already met today, so near the 57.36, but our main target near the 56.17 mark, which is the lowest point of October, around there. That's the main target for us right now. You can see that the commodity is making its way towards, or I should say, making its way in that direction. The only little hold up it's getting right now is near this intraday swing low of the 3rd of October, not the low of the 3rd of October, but the intraday swing low. So let's see if that's just a temporary obstacle for this commodity. If it's not, then yes, like I said, we will aim for this lowest point of October near the 56.17. If it does get a hold up here, well, I mean, we could in a way also again consider a possible maybe correction here back towards this downside line, and maybe only then we could see that move towards the lowest point of October. But again, like I said, all eyes right now are on this little intraday swing low. This is where the price is right now. If it continues to hold, like I said, do not exclude a potential maybe correction first, and then maybe a move lower. But again, we're not far from this lowest point, so it could be quite interesting. The small probably suggestion is probably be very careful and leave it. Maybe just continue just observing this one, and if you do like to trade this one, then maybe prepare yourself just for next week. For now, it's too close. On one hand, we are quite overstretched to the downside, but on the other hand, we're really not far from this lowest point of October. So in a way, it's like a bit of a gamble, I would say. So again, guys, yes, overall the trend is still to the downside, but if you are short-term traders, be very careful here. GBPUSD. Now, with this one, I talked about this one this morning, and what I was saying to you guys, keep your eyes on this barrier right here. During my morning video, we were already slightly above this one, above the barrier near the 1.3110. Of course, what I was saying, that this increases the chances of a further drift higher. One of our targets will be, of course, the 1.3175 zone, which is the high of the 24th of January. So we didn't quite reach that, but it's on the right path. Let's put it that way. It's on the right path, and this is going to be the first level that we're going to be aiming for. If it gets a hold up here, then of course we could see something like this, where we could see a bit of correction and then maybe another push higher, or in a way, of course, if this barrier starts surrendering straight away, then, well, I mean, we could see that push earlier to the upside. Maybe we even could get a hold up near the 1.3212, which is the high of the 7th of January, but the main target for us right now at this point in time is the 1.3284, which is the high of the 31st of December. Now, at this point somewhere we may see a bit of correction. For now, the main target is the 1.3175. That's from the very short term perspective. Then if we get a nice hold up here and we see the rate starting to slide lower, then yes, we will consider a potential maybe test of this 1.3110 zone again. But if it holds, this is where the bulls could step in again and push this one and drive this one to the upside. In case this suddenly starts dropping below the 1.3064-65 zone here, then this would also place the rate below all of its EMAs, and we could consider a potential test of this medium-term upside support line. A bit of a tentative one, as I mentioned this morning, but nevertheless it could get a test. But like I said, we will only consider that if we get a drop below the 1.3064-65 zone, somewhere around here, guys, basically. But for now, from the at least from the short-term perspective, we are more bullish than bearish on this one. USDCAD now. Perfect hit, and this is what I've talked about this morning in my Trader's Espresso, where I was telling you guys to keep a close eye on this downside resistance line taken from the high of the highest point of May of last year. So we had a perfect hit of that line. You can see that even had just a fractional overshoot here, but nevertheless we'll take that, and then the rate retraced back to the downside. So for now it's working out nicely. So of course, the big question here is, can we see a bit of correction here to the downside, maybe towards this short-term upside support line taken from the low of the 7th of January? In a way, yes, we will consider that idea, but we will consider it if we get a drop below the 1.3186 zone, which is the low of the 30th of January, which was yesterday. So if we get a drop below this, then yep, there could be more chances for this one to drift back down here towards this short-term upside line, maybe for a test, and if it holds, we could see a nice rebound back to the upside. But again, maybe this is a bit getting ahead of myself. For now, also what you need to do is, of course, keep your eyes on this downside line, on this medium-term downside line. If by any chance we get a nice break here and the pair closes the week above this, then well, I mean, it increases the chances of a potential move higher here towards the highs of November, so towards the highest point of November, near the 1.3328-27 zone, roughly around there. And but again, probably to be more on the safe side, ideally we would like to see actually not a push above the 1.3270 as I've mentioned this morning, but probably we'll drop this a little bit here towards the 1.3250 territory, which is the high in the intraday swing, or no, sorry, the high of the 10th of December. There we go. So if we get a push above that and we get a nice close, maybe a weekly candle close above this area, then well, I mean, it does increase the chances of a potential move further north towards the 1.3328 zone, which is the highest point of November. But for now, as long as it remains below this medium-term downside line, we'll remain cautious and careful, but if it starts dropping below the 1.3186, this is where we will consider a potential move towards this short-term upside support line taken from the low of the 7th of January. And the last pair for this session is going to be the euro dollar. Now this is what I talked about this morning. What I was saying, that if this drifts below the 1.10 zone, then yes, we will aim for further declines. But as you can see, it did drift a little bit lower, but didn't quite reach the 1.10 even, and broke above this very short-term downside line here. And this is what I was saying, that if we get a break of this downside line and a push above the 1.1039 zone, roughly around here, then yes, in a way it could clear the path for itself towards this other short-term downside line taken from the high of the 31st of December. So again, for now, everything's kind of leaning a bit more towards the upside, but that's from the very short-term perspective, because again, as I said, if this downside line holds, we could see another round of selling. For now, be very careful, guys. Let's go step by step on this one. We are aiming for some higher levels. Initially, we'll aim for the 1.1066, then 1.1075. But if those get overshot, then it could test this this downside line, take it from the high of the 31st of December. So that's going to be our main target for now, and then we'll take it, and then we will reevaluate everything if we see a test of that. If by any chance this suddenly starts dropping sharply to the downside, well, I mean, then of course keep your eyes on that psychological 1.10 zone. If we get another drop below this, then well, this could increase the chances of a further drift south. So initially we'll target the 1.0980, but if this is just a temporary pit stop, well, further declines could be possible. This would confirm a forthcoming lower low, and yep, more sellers could be joining in here. But again, for now, from the very short-term perspective, there is a possibility for this one to drift further north, at least a little bit more, towards this downside line, and then we'll take it from there. If it wants to break this, then yep, we'll reevaluate everything again. But if it stays below, we could see another round of selling. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me on Monday, as always, at my Traders Espresso, 7 o'clock GMT time. But for now, I hope you have a wonderful evening. I hope you have a wonderful weekend. And yep, guys, I'll see you on Monday at my Traders Espresso, 7 o'clock GMT. Thank you very much, and bye-bye.